Good afternoon. I'd like to start by welcoming our stakeholders turning into the audio webcast, as well as those of you who are in Washington, D.C. observing our meeting in person today. Before we begin with the business of our meeting, I would like to note that our Board of Trustees believe that maintaining strong relationships with elected officials and our stakeholders is part of our responsibility as trustees to promote and protect the integrity of the standard setting process. Earlier today, we had substantive meetings on Capitol Hill and with leaders of stakeholder groups on issues of mutual interest. It was an incredibly productive morning and a great way to discuss the importance of high quality accounting standards to the US capital markets. For today's meeting, we're going to hear reports from the FASB Chair, the GASB Chair, the FAF Executive Director, and the FAF Treasurer. We will also receive reports about the latest activities of the Private Company Council, the Financial Accounting Standards Advisory Council, and the Governmental Accounting Standards Advisory Council. And then we'll also hear a report from the Trustees Standard Setting Process Oversight Committee. Before we get to those reports, however, I'd like to take a moment to recognize GASB member Jim Brown, who has joined us today virtually and who will retire at the end of June. Jim joined the GASB in 2012, and during his tenure, the board has issued more than 30 final standards, including fair value, post-employment benefits, the gap hierarchy, and guidance on leasing. His impressive career spans several decades, culminating in his position as partner at BKD LLP before his retirement. In addition to his work at BKD, Jim was a strong proponent of furthering governmental accounting, and for many years he taught continuing education courses for the AICPA. Jim was also named BKD's 2021 Distinguished Ambassador for his high-level engagement in the profession since his retirement in 2011, most notably for his service on the GASB during that time. I'd like to thank Jim for that dedicated service and wish him well as he dedicates more time to his lifelong love of baseball. I understand he has visited all 30 major league parks and in a good year attends more than 150 games. Jim, we want to thank you again for your service and wish you all of the best. So thank you very much, Jim. Although we will miss working with Jim, we are also pleased to welcome Dr. Jacqueline Reck to the GASB board. Jackie is an Associate Dean of Financial Management and Academic Affairs at the Muma College of Business at the University of South Florida. In addition to teaching financial, governmental, and not-for-profit accounting, she has focused her research on governmental accounting and auditing, accounting information systems, and the reporting and use of financial information. Jacqueline will begin her term July 1st, and we also welcome her to this role. I would also like to acknowledge that the FAF is marking a milestone, its 50th anniversary. The FAF was established by the Wheat Committee in 1972 to appoint and oversee independent financial accounting standard setting boards in the US. At that time, the Board of Trustees was tasked with safeguarding the integrity of standard setting and establishing the FASB and later the GASB. This work continues to this day. As an organization, we are consistently searching for new leadership talent as the terms of our current board and trustee members expire. At present, we are conducting searches for one new trustee and have opened the search for our next FAF Chair. We expect to provide an update on these searches at our next trustee meeting in August. We also held our annual dinner with our DC stakeholders last night, where we heard from our guest speaker, former FAF Chairman Jack Brennan. Mr. Brennan served as FAF Chair from 2009 until 2014. At the dinner, Jack spoke about the value of and continuing need for high quality accounting standards set by boards that conduct a robust, inclusive, and independent standard setting process. This process, Jack argued, has served the public interest by providing investors and other users of financial statements with the timely, useful information they need to make decisions about whether and how to allocate capital. We have posted Jack's speech on our website, and we encourage all of those listening or other stakeholders to have the opportunity to look at it. We really do encourage you. It was a wonderful, wonderful speech. In addition to meeting with stakeholders in DC to listen to vital feedback, we will also soon post our strategic plan to our website to invite our wider range of stakeholders to offer their feedback. The draft plan will be posted in the near future and will be available for public comment for 60 days. We invite stakeholders to download the draft plan from our site, review it carefully, and provide us with your feedback about our mission and vision, our values, and the 6 strategic goals and objectives we have identified. Following the public comment, we will summarize all stakeholder input for our Board of Trustees to review, and we expect to publish our final strategic plan before the end of the year. So with that, I'd now like to move into our regular agenda, and the first item of business is to approve the minutes from the board's February 15 meeting. May I ask for a motion?
So moved.
A second? All in favor?
Aye.
Opposed? The motion carries. So the next item, moving to our reports of the FASB Chair.
Great. Thank you, Kathy, and welcome to the trustees. It's nice to see you all here in person. Regarding the FASB, our focus continues to be in 3 principal areas. The first, our agenda outreach project. The second, the post-implementation review related to our major standards. And the third, the continuing progress on our existing agenda. I'd note that all of these are focused on improving financial, accounting, and reporting and providing relevant information to investors and other allocators of capital. I'd like to spend a few minutes to talk about these each in a little more detail. Regarding agenda outreach, our staff continues to focus on an in-depth analysis and additional stakeholder outreach on what we learned from the more than 500 responses to our agenda consultation invitation to comment. And that feedback is already influencing our current agenda projects. I'd note that the investor feedback on disaggregation of financial information in the income statement has already shaped the direction of our newly focused and newly named technical agenda project on income statement disaggregation. I'd also note that the investor input has helped us focus our long-term income tax disclosures project to items that will benefit allocators of capital. Specifically, we revised that project to focus on improving the transparency and usefulness of the income tax disclosure information. And we're focused on both income taxes paid and making improvements to the effective tax rate reconciliation. Also, as a result of the invitation to comment, we have added a project to our agenda based on the accounting for digital assets. And I would note that that was a project that we had performed extensive outreach as part of our research agenda. Based in part on feedback from this ITC process, we also removed 2 projects from our technical agenda. That included the Consolidation Guidance Reorganization Project, as well as a project on liability and equity accounting. In addition, on December 15th, as I noted previously, we had announced a comprehensive update to our research agenda. The research agenda is directed by the chairman and it is used to gather additional information to bring relevant information to our board to make decisions on whether projects should be added to our technical agenda. We've discussed several of these topics already at recent board meetings, and the remainder, including our pending ITC on government grant accounting, will be back in front of our board in the near term. Other items that we have looked at and or will look at include accounting for financial instruments with environmental, social, and governance linked features, as well as the accounting for regulatory credits. We also have our continuing research project on accounting and reporting for intangibles, and we specifically have also focused on the accounting for software. And we also have on our research agenda a project on the definition of a derivative as a subset of our hedging phase 2 project. I would emphasize we aren't done. Over the next few weeks, you'll hear our staff come back to our board and discuss in detail the additional feedback we received as part of the ITC project. The output of that could be adding projects to our technical agenda, decisions to pursue additional research, or to hold those ideas for a future date and time for our board to consider. But stay tuned. And we expect to conclude this process through a report that we will be issuing this summer, summarizing all the feedback we received as part of the ITC process, as well as what we have done with that input so that it's clear to our stakeholders. On the post-implementation review, I will say we continue to make progress on the post-implementation review under the supervision of our trustees related to the 3 major projects: revenue recognition, leasing, and the current expected credit loss model. That is continuing. We continue to fine tune those standards based on what we're learning as part of the post-implementation review. And that includes our recently released standard related to troubled debt restructurings and improving the disclosures related to loan modifications. Moving on to our existing agenda. We continue to make very good progress on the projects on our existing agenda. We recently issued final standards to require disclosure of information about certain types of government assistance. We completed a PCC initiative that Candy will likely talk about related to improvement of an area of financial reporting for business entities that issue equity classified share awards. And we also completed our portfolio layer hedging project. And shortly, we expect to issue a final standard related to fair value measurement of equity securities subject to contractual sale restrictions. In the near term, we hope to issue a final standard on disclosure of supplier finance programs. So in short, the FASB works continuously to improve the information provided to investors and allocators of capital, all as part of our process to continuously earn the ability to set standards. With that, Kathy, that concludes my report. Happy to answer any questions.
Thanks, Rich. Do we have any questions for Rich? Yeah, Tim.
Hey, Rich, first I want to congratulate you on the level of robust feedback and input that I think you've gained through this agenda consultation process. One of the things you mentioned is the feedback on disaggregation and how it's already shaping your agenda. And I feel like disaggregation is one of those words that means different things to different people. And so if you just could elaborate a little bit, sort of what does it mean to us and where do you see that going from here?
Sure, and I think you're absolutely right. And some would challenge the use of the word disaggregation because that presumes that you've taken a bunch of pieces and put them together, and we're now taking them apart. In some cases, that is exactly what we're doing. It's providing additional transparency into larger numbers, often on the face of the income statement, by providing the details of what makes up that number. In other cases, like the income tax project that we're working on, it's focused not only on disaggregating certain information, but seeing if there are better ways to communicate the components of that information. I think it's fair to say in the information age, there's a desire for additional information. And this is a byproduct of that. As we listen to the investors and other allocators of capital providing us input, they were looking for that increased transparency and detail related to those figures.
Thanks, Rich. Appreciate the responsiveness to the investor point of view. So thank you.
Other questions for Rich? Yeah, Lynette.
Thanks, Rich. I'm curious about FASB's relationship with IASB and if there are any plans to have future meetings or what are the areas of common interest?
Sure, and what we do meet regularly, both myself with my counterpart at the IASB, Hillary Salo, our technical director, meets on a regular basis with the technical director over at the IASB. It benefits us both from a sharing of information. Very often the issues that we are dealing with or we are seeing, they are also seeing. We can share information. We can share our approaches to issues to the extent we have overlapping projects that we're considering. We share information. We do have a tentative plan for a joint meeting with the IASB in the latter part of September of this year to talk about projects of mutual interest.
Other questions? If not, thank you so much, Rich. Our next report is from Candy Wright, Chair of the PCC. Candy.
Thank you. I will be covering a one-year time period since the last time I met with the trustees. So pleased to be here. Thank you for having me to give you the update on what the Private Company Council has been doing. So we have had 4 meetings since the last time I met with you, including 2 joint meetings, one with the AICPA Technical Issue Committee and another one with the Small Business Advisory Committee. And both of those meetings were very fruitful. We got a lot of good feedback into projects of mutual interest. We finalized our project on the share-based payment practical expedient, which Rich mentioned earlier, which will help private companies be able to determine the current price input of an equity classified share-based payment award using a practical expedient. So that is going to be what we hope to be very beneficial for stock compensation related to private companies. We have spent most of our year actually performing outreach on our research project on profits interest. And we have gained a lot of good information from a lot of stakeholders in this area. And at our last meeting in April, we recommended that the board add a project to its technical agenda related to the scope of guidance for profits interest by providing examples on how the scope of guidance may apply to both private and public companies. And the reason that the PCC recommended that the board add a project to its agenda is because there are some public companies that actually have profits interests that survive maybe an IPO. And so it applies to both. So we felt like it was more appropriate for the board to put it on their agenda versus the PCC have it on our agenda. However, we plan to stay very actively involved in this project to help provide input into the example should the board decide to take the project on and provide our input so that it is beneficial for private companies as well as public companies. We continue to provide input on implementation of the 3 standards that Rich mentioned relating to private companies. The current expected credit loss model is not yet effective for private companies, so there's not been a lot of implementation issues as of yet to provide input on. We are currently now in the private company sector working on leases. It will be effective for 12/31/2022, so we expect to continue to provide a lot of input in the implementation of that standard as we work in the private company sector to apply that standard. We have participated in 2 webcasts on the FASB update for private companies as well as not-for-profit update, and those continue to get large numbers of participants, so we're pleased to be able to participate in that. We had 2 outreach meetings during the year, one at the AICBA Engage Conference and another one with a new group, the AICBA G400 Community Meeting. It's our first time that we've had an outreach meeting with them, and we hope to continue to develop a relationship with that group. And since our last meeting, we have had 3 new PCC members. Adam Roark filled Rick Reisig's seat. He joined you, so we replaced him. And then we had 2 members whose terms, her 6 years expired, David Lomax and Tim Kurtz. So we have David Pesh and Paul Hensley that have joined our group effective January 1. So we look forward to working with our 2 new members, and pleased to say that our June meeting will be in person. So we will actually be able to see everyone face to face. We're excited about that and start developing our relationships on a more personal level with our group. So that concludes my report.
Thanks very much, Candy. Are there any questions for Candy on our report? No? Candy, thank you very much. Our next report is from the FASAC Chair. Mike?
Thank you. My report can be found on master page 42 in your materials. We'll cover activities through the end of March, but I'll highlight some recent and some upcoming activities in my remarks. We have 9 new members of FASAC this year. We held an orientation session for them in February. In March, we held our annual administrative session that takes a self-review of our operations and effectiveness. We continue to look for improvements in our process, especially how it relates to enhancing balanced discussions between users and preparers of financial statements. In that regard, we have started holding voluntary educational sessions before the meeting, covering some of the more complex technical topics. The first session was quite well attended, and we'll continue to experiment with that. I'd also highlight over the last year, I think we hit a record in terms of attendance. Our attendance for meetings was 94%. Some of that was due obviously to the virtual format of the meetings, but I think it also speaks to the engagement of our group. So I appreciate that and their engagement. Our March meeting included discussions on 2 topics. The first topic was on the research project, Accounting for and Disclosure of Intangibles. During that session, FASAC members discussed the accounting for and disclosure of intangible assets, including internally developed intangibles, software costs, and research and development. So it's quite a broad discussion. Overall, council members agreed that improvements should be made to the accounting for and disclosure of intangible assets, and that the board should begin with disclosure and presentation and determine at a later stage what improvements may be needed as it relates to recognition and measurement. Some investors and other allocators of capital indicated that greater capitalization of intangibles on the balance sheet would not provide incremental decision useful information, but they supported an increase in disclosures about intangibles and suggested the board consider improvements to the accounting for and disclosure of intangibles in tandem with the disaggregation income statement project. Preparers and practitioners highlighted that an increase in capitalization would increase costs and create complexity in recognition and subsequent measurement, given the high level of judgment involved in that topic. We also discussed accounting for software costs. Overall, council members agreed that improvements should be made to accounting for and disclosure of software costs, both related to internal and external use. Investors requested greater consistency and comparability, and that internal and external use software should follow the same accounting model. However, they did note that development costs are analyzed differently by many investors, so probably worthy of additional discussion. Preparers noted current guidance is outdated and challenging to apply in the current environment in light of technology changes such as cloud computing, SIS, and agile software development models. The second topic was on the accounting for government grants. This was an education session on the objective of the FASB's research project, which is to solicit feedback on whether certain requirements of IAS 20 should be incorporated into GAAP. The education session was in anticipation of a future discussion of that topic. In our June meeting, we anticipate the topics will be disaggregation, income statement expenses, to seek the council members' views about the areas of that project, and an update on the 2021 agenda consultation process. We also plan to hold a closed administrative session to brief members on your new strategic plan. We updated and included in our materials longer-term outlook of potential FASAC topics on master page 48 in your materials. We welcome your input on these and any other topics that you think FASAC should consider in the future. And then finally, we will be seeking nomination candidates to join FASAC in 2023. In the coming months, as part of that process, we're interested in identifying candidates with diverse experience, backgrounds, and perspective, which are important to FASAC's operations and to the FASB's independent standard setting process. As part of our nomination process, additional information about the type of candidates we are pursuing for the next year will be posted to our website in coming month. And as always, any suggestions from this group would be greatly appreciated. Happy to take any questions.
Thanks so much, Mike. Questions for Mike? No? Thank you very much. Our next report is from the GASB chair, Joel.
Thanks, Kathy, and good afternoon, everybody. It's great to see everybody in person. At least most people are here in person. And I'll echo Kathy's congratulations and a thank you to Jim Brown. We'll talk more about Jim at his last board meeting, but since Kathy brought it up, we are especially grateful to Jim for his service, and we are excited to have Jackie come on the board. In the first quarter for the GASB, we didn't issue any standards, we didn't add any new projects, but we certainly moved a lot of things forward. And the second quarter actually will be a big quarter for us in the issuance of documents, and I'll preview some of those in my remarks, but I'll start with two of our big three, which won't have documents come out in the second quarter: the financial reporting model and the revenue and expense recognition project. The financial reporting model, remember the big change is in the governmental funds, or the big focus is on the governmental funds and how they're accounted for. The first quarter was really marked with the board has decided to retain a short-term perspective for those governmental funds, and we're really working on ways to highlight that these statements communicate a different message and to really point people to the government-wide statements in addition to the government fund statements, so that they know they need to see all of it to get a full picture of the government's financial position. In particular, we've asked the staff to go back and look at the reconciliation between those statements, and is there a way to improve that to really message the differences between the two sets of statements. The revenue and expense recognition project, not as far along, but we've been working on kind of going back over the feedback we received on kind of the foundational building blocks of the conceptual or of the model, and affirming those and making tweaks based on the feedback we received. And then we continue to work and make sure that the two projects will make sense together as they move forward, because both of them will be having stakeholders go through sets of transactions and categorize them and recognize them. And we need to use similar terminology, similar units of account to make that practically easy for stakeholders to implement. So we're really working on making sure those two projects go together. The third of our big three is one that we are hoping to issue a document on in June, and that's the conceptual framework disclosure project. And this is where the board kind of took on and revisited what does it mean for an item of information to what characteristics should it have for the board and future boards to require it to be in the footnote disclosures. We've affirmed that that should be essential. We issued an exposure draft about 2 years ago, got some feedback, took some of that feedback in and really added to the characteristics of what we consider to be essential. Thought it changed enough that we issued a re-exposure draft last year, spent really the first quarter of this year going back over the feedback to the re-exposure draft, in particular, those characteristics of essentiality. We've made some small edits to try to take into consideration some of that feedback, and we hope to issue a concept statement next month. On smaller practice issue projects, things we will also plan to issue second quarter. Well, one, we've already issued in April, an omnibus GASB 99. We also hope to issue a standard in June on compensated absences, and then another one on accounting changes and error corrections. And finally, as if that's not enough for one quarter, we plan to issue an exposure draft on what we used to call risks and uncertainties disclosures, now are calling certain risk disclosures. And so that's kind of what we spent a lot of time in the first quarter, really moving that forward to a lot of documents coming out in the second quarter. Final thing I'll mention is we did update in March our rules of procedure. We went over those with the Oversight Committee, both last quarter, some preview, and then this quarter. Largely, it was kind of modernizing terminology, things like that. We did really try to focus on making sure we retained our due process that it needed to have, but that we could be responsive and nimble when we needed to be. And so we didn't change any of the comment periods, but we did change some of the wording about when we might have exceptions to the comment period. And the language we used actually mirrors the FASB's rules of procedure. So that would probably make sense to everybody. So that's a summary of the quarter. Happy to answer any questions you might have.
It's great, Joel. Yeah, Mike.
Joel, you commented on all the work that you're doing in the second quarter, sounds jam-packed in terms of standard issuance. Can you just comment on the discussions you're having or how you're working through with the governments, their ability to actually implement the standards given the ongoing constraints they continue to face?
Sure, Mike, and we do continue to hear they're dealing with personnel shortages and their resources being pulled with the stimulus funding and lots of directions. And so we were very conscious of that. We extended out some effective dates on some of the standards that we're planning to issue in June to try to make sure that governments had time. And we've been conscious of that with comment periods and things like that. So we are working with them and making sure that we give them an appropriate amount of time to implement, as opposed to trying to get it done quickly. And so that's how we've attempted to respond to that and be really conscious of that.
Great, thank you.
Other questions? Yeah, Manju.
Joel, my question is about the lease standard. It's supposed to be effective this fiscal year. Are you hearing anything from governments about, any comments and any difficulties that they might be having in implementing that?
Sure, Manju. I mean, it is something we're monitoring a lot. We did have some concern maybe, a year ago, but that governments were worried about the shortages that Mike just talked about and were focused on the stimulus, and that they weren't focused on the upcoming lease implementation. But in talking to them, we have been getting questions, 40 to 50 technical inquiries per quarter. Over, I'd say, the last 4 or 5 quarters at this point. So we're confident that governments are going to implement in 2022 as planned. And we have kind of as we've been hearing feedback and based on some of those TIs, we've made some tweaks, including in the omnibus standard, to try to help with some of that implementation, and issued continued implementation guide questions to be responsive. But we feel pretty good that governments are going to implement as planned.
Thank you.
Other questions for Joel?
I have one more.
Yeah.
So this is about ESG. And the MSRB recently received a number of comment letters on its request for information on ESG practices in the municipal securities market. Do you have any observations you can share with us, or can share on the input they received?
Sure, thanks. We certainly saw that request, saw a lot of the comment letters, and I think it's interesting. I would point out that we have a paper that we've been working on, very similar to a paper that the FASB released last year, that talks about how existing guidance, existing standards already should contemplate some things that matters that certain people might consider to be ESG issues now, even though they might not have been ESG issues when, for example, we issued GASB 18 on landfill obligations, which is environmental related. And so we have a paper that talks about that intersection that we hope to release next week. And I talk about that in relation to the MSRB, because one of the big feedback items they received was there are existing securities disclosure requirements that already should contemplate environmental issues to the extent they might be material. And in a way, not in a way, that is what our paper says, that existing GAAP really contemplates a lot of risks and things, matters to it that might affect an entity, a government's financial condition already that are, ESG related. So we kind of feel like the paper we've been working on really worked nicely with a lot of the comments that the MSRB received.
Any other questions? Thank you again, Joel.
Thank you.
Our next report is from the chair of the GASAC, Beth Pierce. Beth?
Thank you very much. The GASAC held its first meeting of the new year on March 11th and 12th. This meeting, as I noted in my written report, was well attended by GASAC members, GASB staff, and members of the GASB and FAF. 6 new members have been appointed by the FAF. Each has been assigned a mentor, and I've had the pleasure and opportunity to talk with these new members prior to the meeting, and as well their orientation meeting. And I do want to thank Joe Black and Dean Mean for the work that they did on an orientation meeting that was held on March 3rd for new members. The GASAC members provided feedback on the following projects: the conceptual framework, disclosure framework, the financial reporting model, prior period adjustments, accounting changes and error corrections, revenue and expense recognition, and risk and uncertainty disclosures. One item that generated considerable discussion was the annual review and ranking of member plan priorities. This is my second involvement in that process, and it's a very healthy project to engage members and to provide input to the GASB. This was what was involved in this was the development of preliminary rankings, followed by a discussion and the development of final priorities. The top 5 priorities that were identified by the members are capital assets, subsequent events, electronic financial reporting, digital assets, reporting unit presentations. And I would say, looking at those rankings, that they were far and above what you see in the remainders of the priorities that were reviewed, and that included some 42 various items. We received reports from the GASB chair and the GASB director, and previously Joe has identified the priorities there beginning on page 49 of your report. We also received a report from the FAF executive director, provided an update on appointments that I previously noted, as well as the FAF budget, the 2021 audited financial statements, the CV&E initiative, and the fall plan move to new space this year. We will be having our next meeting is scheduled on July 11th and 12th, and that will be an House meeting, and we're looking forward again to meeting all of our folks. We've had some new members, and it will be great to get together to know each other in the process. And that concludes my report, and I would be pleased to answer any questions.
Thanks very much, Beth. Are there any questions for Beth? No? Beth, thank you again for your report and for joining us.
Thank you.
Our next report is from David Lillard and Tim Ryan, the co-chairs of the Standard Setting Process Oversight Committee.
Yes, Madam Chair, thank you. David Lillard reporting initially on behalf of the committee. The report of the Standard Setting Process Oversight Committee, the GASB Chair, Joel Black, and Technical Director Alan Skelton reviewed progress made on agenda projects as well as post-implementation review activities and projects during our meeting held yesterday. In particular, Chairman Black noted that GASB's continued focus on ensuring coordination between the financial reporting model project and the revenue and expense project and topics on those projects that overlap. We also discussed the GASB staff recruiting efforts and recent stakeholder outreach videos that the GASB staff and the FAF staff have produced and are developing a plan to distribute. We further, with the GASB's disclosure, discussed the GASB's disclosure framework project coming to a close and materials for the meeting included in the 12-page due process report that described the various forms of stakeholder outreach and other due process activities which have been conducted by the GASB during the project. Chairman Black reviewed some aspects of that during his previous report here today. Also, in regard to trustee reports on observations of meetings, at each committee meeting, we discuss the various meetings that we attend as trustees, the advisory groups, and the FASB and GASB board meetings that committee members have observed during the past quarter. I shared my perspectives on the GASAC, the Governmental Accounting Standards Advisory Council meeting held on March 7 and 8. As did the FAF trustee and committee member Robin Washington, who also shared her observations about the FASAC meeting, the Financial Accounting Standards Advisory Council meeting that was also held during this quarter. I further want to note that Mary Barth attended and reported on her information with respect to the FASB meeting that she observed during this time. And further, I want to note that FAF trustee Lynette Kelly also observed the FASAC and GASAC meetings held in March, as well as parts of the March GASB meeting. And I'll turn it over to co-chair Tim Ryan for his portion of the report.
Thank you so much, David. Good afternoon, everybody. Thank you for being here. We spent some time with Hillary Salo and Jim Croker going through some of the matters that Rich has covered. Before I dive into those, I do want to let those who are listening let you know that one of the big things that the Standard Oversight Committee is focused on is making sure, number one, we're getting feedback from all relevant stakeholders across the board. And we spent a good amount of time thematically making sure we do, the board and the team are doing that. And that's a big area of focus. Secondly, we look at the types of feedback that we're getting across the board and trying to understand the feedback coming from different constituents. And then thirdly, how we're reacting to that feedback and how the board and the team are reacting to that feedback. As Rich had talked about, the first area was agenda consultation, and we got an update on the disaggregation process and importantly, what type of feedback was coming back and how the board and the team are refocusing and reacting to that feedback. And we saw clear evidence of that happening based upon that feedback. Similarly, on the income tax disclosure project, we understood the types of feedback, the different points of view that came from a number of different stakeholders, and the steps that were taking the steps the board and the team were taking on that. And we felt very good about that process. We also heard feedback on the digital assets being added to the agenda because that was coming up from a number of different stakeholders as well. And that was important and helpful for us to hear. We think it's good that two projects came off the agenda because it was feedback from stakeholders that those were less valued and resources have to be allocated appropriately, and resources are getting reallocated to the projects that stakeholders are telling us and the board that are more important. And again, good evidence of the listening and the types of feedback that are coming in. We then got an update on the research agenda project, as Rich had just talked about. And it was feedback came that areas, particularly in software, that gap may not be keeping up. And therefore the board and the team is looking at how do you be responsive to that feedback coming across and showing the relevance of the research agenda effort that Rich and the team are leading. Lastly, we got an update on the post-implementation review, and we saw the TDR project that came out as a result of feedback, signifying the robustness of the PIR process. And we spent some time talking about the TDR process and the feedback that went into that. And we also got an update on the board's decision not to defer the CECL implementation for community banks, but how the all feedback was considered and the feedback we got from different stakeholder groups, including the regulatory environment as well, the regulatory stakeholder group as well. Last week, we spent some time getting feedback on hot button issues such as crypto and options and other areas that different stakeholders are raising as well in a robust discussion. At the end of the day, what we felt very good as an oversight committee on is we are getting feedback from a broad number of stakeholders. The types of feedback, we have a good sense as to the feedback that comes from different not only different investor groups, but subsets of those groups, as well as the preparer community and other communities as well. And we feel very good that the board and the team are reacting to that feedback appropriately and not frankly being dug in on certain positions, but having the courage to take that feedback and react appropriately. Moving on, we also heard from Sue Cosper on the PCC matters, and we got an update there. Rick Reisig, you had a chance to observe that some of those meetings, so I'm going to turn it over to you. I know you're on the phone, and I'll let you comment on that.
Thanks a lot, Tim. I'd be glad to do so. All of you heard the technical aspects of the PCC meetings from Chair Candy Wright earlier today. I'll give you some feedback on the observation or how the conversations took place. The one thing I'll mention is, once again, the PCC members are very engaged. They're all very much involved in the conversations and the different topics. I think just as importantly, all the FASB members too are very much engaged and delivering their viewpoints on the discussion, providing guidance to the PCC on different topics that they may want to consider. And I think that's pretty notable. The one thing I'll leave the trustees with, I think that makes us feel good about it, is within the discussions that the PCC members were having along with the FASB members, there were differing views expressed, which I think is always a good thing to acknowledge, because disagreement amongst rational people usually leads to better decisions, and I think it will in this case too. And so they were very good discussions that they had, and I think good decisions reached. So thanks, Tim.
Thank you, Rick, very much. And then lastly, we had our annual meeting with Candy Wright, as she reported. It was great to have that meeting, and thank you, Candy, for that. And we covered the topics that Candy had covered. One of the biggest things we were looking for is engagement, which we felt very good about, and also just to make sure the right resourcing was there. And we also felt good about there. We love the creativity of the videos that go into the discussions, and we had a good discussion there, similar to what Candy had laid out. So Kathy, with that, I'll turn it back to you.
Thanks so much, David and Tim. Our next report is from John Auchincloss, our Executive Director. John.
Thank you, Kathy. So as I have previously reported, and as Beth Pierce also noted, we are moving later this year to new offices at 801 Main Street in Norwalk, Connecticut, which is not far from our current location. The build out of our new facilities is, I'm glad to report, it's proceeding on schedule and budget. And while we are keeping a very careful eye on possible supply chain issues, we currently expect we will be able to move into our space in the early fall, while maintaining, of course, contingency plans should unforeseen delays occur. For our new offices, we are investing in technology that we believe will facilitate both in-person and as well as hybrid or fully virtual meetings. Over the last several years, I've been reporting on the FAF's Content, Vision, and Enablement project, which we call CV&E, which has been a significant effort and a significant investment to bring our publication systems onto a robust platform. We are now closing in on a successful completion of this project, with cut over to the new platform currently envisioned to occur in the next several months. The new system should provide a reliable and stable platform to support our standard-setting publication needs. The FAF's 2021 annual report is nearly complete with the twin themes of the FAF's 50th anniversary and standards that work from Main Street to Wall Street. The report highlights key FASB, GASB, and FAF achievements within the context of 50 years of progress. The report will be posted online later this month with on-demand print copies available upon request. As our employees have returned to work on a hybrid schedule, they are demonstrating a strong appetite to return to the community service work they enjoyed before the pandemic. So one recent effort I'd like to highlight, our employees volunteered to prepare 10,000 grocery shopping bags that the U.S. Postal Service will use to collect food to distribute to needy families in our part of Connecticut. Last, and certainly not least, it's with mixed emotions. I'm reporting that the FAF's Chief of Staff, Kim Petrone, will be retiring effective June 30th. Kim has been with the FASB and the FAF for more than 3 decades. During that time, she has rendered extraordinary service to our organization, and particularly to our Board of Trustees, always with unflappable good humor and an unerring eye towards efficient operation, but more importantly, the right things to do to advance our mission, benefit our stakeholders. I'm sure those present in our conference room today will join me in thanking Kim and wishing her a happy and rewarding retirement.
Thank you for your report, John, and thank you for your service, Kim. Our final report is from the FAF Treasurer, David Lillard. David?
Thank you, Madam Chair. The FAF's financial results for the quarter ending March 31, 2022 are located on master page 67 of the meeting packet materials. The financial condition of the FAF remained strong. Net assets increased $42.5 million in the quarter as the annual FASB and GASB accounting support fees of $53.6 million were recognized, consistent with the budget. Overall, the increase in net assets is consistent with the 2022 budget, with the following offsetting variances. First, operating expenses were $1.1 million lower than budget due to lower salary and benefits for several vacant positions across the organization and lower travel and meeting costs related to COVID-19. Also, the reserve fund investment income was $1.2 million less than budget due to challenging market conditions. The balance sheet reflects an additional operating lease right of use asset and operating lease liability of approximately $16.5 million upon possession for construction purposes of the new office space at 801 Main Avenue. In addition, approximately $1 million of capital was expended in the quarter related to design and initial construction of that space. Also, I'll note in closing, overall personnel headcount was 9 below budget, reflecting variant vacancies of several FAF, FASB, and GASB positions during the quarter. Thank you, Madam Chair.
Thank you very much, David. So this brings us to the conclusion of our public session. I want to thank everybody who joined us by webcast or those who joined us in person today in Washington. I want to remind everyone that our next Board of Trustees meeting will be held virtually on Tuesday, August 23rd. And I wish you all a good day. Thanks again.